here come the numbers now, the economic data we've been talking about. Initial jobless claims coming in lower than expected. In fact, a pretty significant drop from the week before at 453,000 claims. The expectation was for a drop of 5,000 to 460,000 claims. Continuing claims coming in at 4.45 million. That is also slightly below the expectation of 4.47 million. And we mentioned that we were going to get revised GDP numbers, the third revision. For second quarter, a gain of 1.7%. That is slightly actually above what we heard before. Personal consumption also slightly higher. So these are all pretty good numbers right now for the economy. I want to get to Mike McKee with more details on this. Mike.
Well, let's start with jobless claims. It will be interesting to see how the markets react, because we were talking about a bad news being good news for the markets. We got good news. How will they react to this? Claims fall by 16,000 on the month to 453,000. That's the right direction. That's the kind of change we need to see, and the idea that we might get some stronger job growth going forward gains some traction with that. Initial claims on a non-seasonally adjusted basis all the way down to 370,000 right now. As far as GDP, congratulate yourselves. It's the personal consumption that changed the most in this index, contributing to the higher than expected growth. We shopped a little more than we thought we would. Personal consumption up 2.2% on the quarter. Negligible changes in inventories and in trade numbers. So not a lot from that. And let me just quickly show you the inflation number, because the Fed has made a big deal out of that. 1% on a core basis. That's a little bit lower than we had seen earlier, 1.1%. So in that sense, that's kind of what the Fed's looking for to trigger more QE. We'll see how they react.